Hey everyone, thanks for joining us on December. We're really excited to have Samuel Gordon on. We had a similar topic in the past where we discussed investing in whiskey. Samuel reached out about potentially featuring him about investing in tequila. So I thought it would be a natural extension of the previous conversation that we had. So I look forward to having him on board. Samuel is a really interesting guy. He's all over the place. First time I talked to him, he was in Miami. Now he's in United Kingdom, so he travels a lot. And I think he just brings an interesting perspective towards investing in alternative investments. So without further ado, I want to introduce you guys to Samuel Gordon, where he'll go over his background and kind of an intro to this unique asset class.
Thanks so much, Dennis. Thanks for having me.
Okay. Thanks, man. So just get into it. Tell us a little bit about yourself.
So, my background started off in more traditional finance investments, but I was very quickly turned away to the alternative space within about 18 months of working in more traditional markets, noticing the need for high net worth investors to hedge against economic events like inflation, rising interest rates, market volatility. First asset class that I came across at the time was whiskey cask investment. So I'm Scottish originally, from Scotland, from just outside Edinburgh, a city called Perth, small city in Scotland. So for about 8 years, I worked in Scotch whiskey cask investments. I did diversify uh, within the last sort of year and a half into Japanese whiskey casks as well, which is more of an emerging whiskey market compared to Scotch. And during my time, I worked with a business called Braeburn Whiskey, which is one of the market leaders in the Scotch cask investment space. And notably, we launched Scotch whisky cask investment as a regulated asset class in the United States for the very first time. And that was in 2022. So that was an 18-month project that I was on with them. And then when I finished that one up, I left them after about 8 years of working with them and set up my own firm, which is now who I'm working with, Gordon PwC. And really, why I set Gordon PwC up was for three reasons: was to bring more transparency to cask investments. So we are staying in cask investments. We focus on cask investments. And it was to bring more transparency to that market, which inherently is an extremely opaque market. We wanted to bring unique options in not just the whiskey market, so Scotch, Japanese, Irish whiskey, American whiskey, bourbon, but also into other global spirit markets as well. So recently we have diversified our portfolio away from just whiskey assets into tequila assets as well, which ultimately brings investors an extremely unique option in the realm of cask investments. So that's where I'm at now. We're a business that's based in Miami. We have one of our headquarters there, and we also have a headquarters in Dubai for the Gulf and the Middle East market as well.
So Samuel, let's get into some of for the people who want to learn more about the cask whiskey investing. I don't want to spend too much time on this call because we covered that with actually Brayburn. But let's just talk about just high level. What is the difference between cask investing in Scotch and cask investing in tequila? I remember specifically what I found really interesting when I was talking to you is the time frame involved.
Mm.
Versus Scottish whiskey, you could almost hold on to it indefinitely, besides losing some loss to evaporation from what I remember. You will 25-year Scotch is more expensive than 15-year Scotch and 50-year Scotch, but that's not the case with tequila, right? Can you go over that a little bit?
Absolutely. I think, first of all, if you look more on a macro level, so if you look at where the markets are now, so if you even add wine into the mix, Dennis, if you look at where wine was 30 years ago, Wine is obviously a very established market now in terms of an investable asset class. If you look where whiskey was, let's say 10 or 15 years ago, it's now a much more established asset class, whiskey cask investment. Tequila is just starting now. And the returns that investors were able to make in wine, in whiskey, when those markets were very much just at that emerging stage, those were the investors that made the best returns. And that's very much the opportunity that tequila investors have today, is to be those early bird investors and to make those better returns whilst it's still an emerging asset class. You're right, you are right. When you look at the term of the investment, you're really looking at a maximum of 3 years with tequila. Has something to do with that? Yes, maximum with a tequila cask, you're going to be able to age it for somewhere between 10 and 12 years, because instead of evaporating it around 2% a year, which is the case with Scotch, you're evaporating at about 10% a year because of the climate. But if you also look at the categories of tequila, so you've got a Blanco tequila, which is anywhere between the age of 0 and 2 months. You've got a Reposado tequila, which is anywhere between the age of 2 and 11 months. You've then got Añejo tequila, which is anywhere between 12 and 36 months, or 1 year and 3 years. And then you've got Extra Añejo tequila, which is anything above 3 years. And ultimately, what investors are aiming to do to get the optimal return is to buy the Blanco when it's a new spirit, fresh in the cask, allow that to age in a bonded warehouse, the same as the whiskey, and then resell that aged liquid, the aged spirit in the cask, when it's either an añejo after year one, or as an extra añejo after year 3.
Got it. And who's the end buyer of this? And just to clarify, this isn't, I know a lot of people have read like the George Clooney business story where he went down there and he, as a hobby, started. This isn't a tequila distillery type of investment. This is very specific. This is cask. This is not the bottles. This is the actual place where the physical asset is stored. And you're almost like the investor's role. Let's go over what is the investor's role in a situation like that? Why do these tequila distilleries even need, why would they even need investors for casks?
Absolutely. Yeah. As a business, essentially what we do with our clients is we bridge the gap between the distilleries and the brands. So you've got around 70 active distilleries in Mexico. They're called NOMs, NOMs, and they all have a very specific number that identifies each NOM. But they produce for around 2,800 brands, and that number is growing each year. So we essentially act as the bridge between the distilleries that produce the tequila and then the brands that want to buy the aged tequila. So to answer your question about who the casks are sold to, the casks are sold to the brands, and we sell the casks to the brands for our clients. Why the brands would need us? First of all, the distilleries themselves, once they produce the tequila, they want to sell the tequila. And the reason for that is because of how long it takes them to produce the tequila. One of the really unique factors with tequila compared to other investable spirits is the blue agave plant. So unlike corn, for example, which is used as the main component to produce whiskey or bourbon American whiskey, or barley for Scotch, you can grow that in about 9 to 12 weeks, right? Agave takes a minimum of 7 years to grow the plant. And then the distillery's got to produce it, the NOM's got to produce it. So ultimately, for cash flow purposes, they want to sell the Blanco tequila, the fresh tequila. But there is a growing need, a growing demand for high quality premium tequilas, ultimately aged tequilas, añejo, extra añejo tequilas. Now, 95% of these brands, as you can tell by the numbers, they don't operate distilleries. They don't have, let's say, warehousing facilities to be aging their tequila. So it makes it extremely challenging and extremely costly for 95 plus percent of those brands. So ultimately, what we are then doing is filling the void for those brands that don't have those capabilities. They operate a buy today, bottle tomorrow business model. We're then able to sell the aged tequila to those brands and facilitate that transaction for them. You've also got the added issue just really of volume, Dennis. The tequila market, if you go back to 20, was valued at about $2.1 million. If you fast forward to last year, 2023, it had shot up to $16.5 billion. If you look at the projections now, the data that's out there, you're looking at a compound annual growth rate of about 11% a year in the market over the next 8 years, up until 2032, which will take the market to a valuation of about $42.5 billion. The key point here is that a lot of that growth is being driven by premiumization. So it's the growth in demand for high quality premium aged tequilas like añejo and extra añejo. So really the combination of the challenges of just aging tequila for a lot of these brands, plus the increase in volume requirement for aged tequilas, that's ultimately where our business comes in and fills that void for the industry.
Got it. That's certainly fascinating. And I think you answered my next question would have been why don't the brands themselves just grow, become the distilleries themselves? And you said it's still cheaper this way than for them to have to grow and distill themselves, right?
Yeah, it's less expensive and there's less risk. They don't have the asset risk of aging thousands, tens of thousands of casks in bonded warehouses over 1 to 3 years.
Now, how does the bonded warehouses compare in somewhere like Scotland to bonded warehouse in like Mexico? Is there safety differences, anything like that? The other question I had that kind of piggybacks off that is I know with Scottish whiskey, you're not allowed to actually transport the casks out of Scotland. Otherwise, they lose their Scottish whiskey designation unless they're bottled in Scotland. Is that the same for tequila?
Yes. Let me answer the questions back to front. So, tequila, like Scotch or like champagne, for example, has a denomination of origin. The denomination of origin for tequila comprises five very small regions within Mexico. The main one being Jalisco, which is in Jalisco. This is where 98 plus percent of tequila production takes place within Mexico. And the whole process, in order to be called 100% agave tequila, which is what we sell, it's akin to your single malt Scotch, for example, the purest form of tequila. That whole process from the growth of the raw materials to the production to the bottling all has to take place within one of those five very small regions within Mexico. Your first question, how does the security or the quality of the warehousing compare to, let's say, Scotland, for example? It's completely on par. I've spent probably 4 or 5 months out of the last 12 to 18 months in Mexico prior to launching this product, analyzing the distilleries, doing the diligence, selecting our partners, and really, in terms of quality of care for the assets, in terms of security, it's on par with Scotland. Really, no difference. Arguably, of course, you've got Mexico, which certainly in some parts you would consider a more volatile country, a less secure country economically than somewhere like Scotland in the UK, for example. And that's true. However, specifically within the region that we're looking at, within Jalisco, you've got cities like Guadalajara there, not too far from Mexico City. These are very affluent, business orientated cities within Mexico. So yeah, extremely secure.
Next question is more of what role does this usually play in a typical investor that reaches out to you? What are they trying to accomplish by buying tequila in the casks? And are you looking at it more from a holistic sense where you don't just you tell them like the tequila has a shorter dated maturation versus a whiskey, and then you complement it so you get the longer duration with the whiskey? Like, how do you usually approach those conversations? And of course, we'll preface this as saying this is not financial advice to anybody specifically. This is just more of general take of like some of the conversations you've had with other investors.
Yeah. Look, we have investors that have invested in tequila with us since we launched the product that have never invested in casks before, whiskey, for example. And these are investors that are looking for assets to diversify their traditional portfolios, hedge against some of the market volatility, hedge against inflation, outperform traditional markets as well. And of course, yes, within an investor's portfolio who perhaps is a seasoned cask investor, we have a lot of them as well. They've got a substantial portfolio of whiskey casks, for example. It does offer them some term diversification. So compared to their whiskey assets, which could be 10, 12, 15 plus years, with tequila, as we've discussed, you're looking at that 1 to 3 year investment term. And something else that is quite unique, Dennis, really is the return on investment as well. Scotch whiskey casks, you're looking at, on average, more moderate growth, somewhere between, let's say, 8 and 12% a year within the whiskey market. Based on our data, over the next 3 to 5 years, even if prices were to remain stagnant in the tequila market, investors are looking at doing somewhere between 13 and 15 a year based on the market data that we've got and that we've analyzed. So there is an overperformance there, or a higher performance in terms of potential return on investment in the tequila market versus the whiskey market as well.
And these are typically accredited investors, correct?
Within the United States, yes.
Got it. And I think you briefly mentioned this before about interest rate sensitivity. How does the overall pricing, I'm assuming that this kind of acts more like gold and real estate. As interest rates go up, there's a baked in inflationary kind of response where in 3 years you'll be able to sell that tequila for even more money as inflationary prices are baked into it. But is that true? Like it more or less the inflation is passed on in terms of the end and sales price for a lot of these casks?
Yeah, that's correct. The underlying asset of a cask is a bottle. So every cask, as we've discussed, will eventually be bottled and sold at retail. So if retail prices are higher, then in theory, wholesale prices, cask wholesale prices can also be pushed up as well.
Got it. And in terms of pricing, how does this work? I remember the typical cask from the Scotch conversation was about $5,000. How does that work with tequila?
Yeah, so in terms of an entry level tequila cask with us, you're looking at somewhere between 2,500 and $2,750.
Got it. Okay. You usually are you buying at all different ages, or you're just buying at the Blanco and then moving it across the line?
Just the Blanco, just the Blanco.
And you said the end buyer is always like these bigger brands. It's not other investors because there's no point of holding on from three. There's not much incentive.
Yeah, yeah. It's key. It's key, Dennis. It's something I missed at the start of the call. We wanted to bring more transparency. We wanted to bring unique opportunities, but we also wanted to bring higher liquidity to our investors as well, which is something that traditionally you don't really get within cask investments. Essentially, if you're operating the exit strategy primarily in the retail client or private investor market, the investor has got far less liquidity because that's a much, much smaller market. We establish relationships with retail brands, as we've discussed, and this allows us to provide greater liquidity to our clients because, as I've said, that market is so vast, expanding somewhere from 16 million around that mark to above 40 million within the next 8 to 10 years. It's sold on to the brands. I forgot your question there, Dennis. What was your question?
No, I think that covers it. How do these bigger brands ever just use their power and leverage to take out the returns from the investor, or they're more or less willing to just pay whatever the market kind of rate is for them?
Yeah, I mean, I've certainly not seen that. Really, what the brands are looking for is three things. They need a volume requirement, they need a certain volume of casks to meet their demand. Those casks in that volume need to be at the right price, at or below market price, and they need to be of the highest quality as well. So if you're able to tick all three of those boxes, which for us, with our data, with our analysis, our diligence, we're able to do, then finding buyers for those casks in the right market conditions, which is the case now, certainly should not be a challenge.
Got it. And in terms of one question that I always like to ask about these assets is collateralizing. Are there any banks or any other financial institutions that would allow you to collateralize those casks so that you could use the money somewhere else?
It's not something that we've tried, so I couldn't answer that question.
Okay, fair enough. And what about risks? Besides third-party risks, besides I obviously probably this investment will trend with the tequila growth in general. So obviously if tequila declines in popularity, that's gonna
Yeah.
negatively offset. But realistically speaking, there's more people in the world, and as there's more people drinking as an adult is pretty common. So you would assume that the demand will grow for almost all spirits to some extent. But besides just overall demand for tequila, what other risks should an investor be on the lookout for something like this?
Yeah, you touch on a very good one. So just the overall market risk, demand for tequila dropping, which is always a risk in any market, of course. As we've discussed, there is no centralized market for tequila. So it's not like the stock market, for example, where you can go and list your stocks and you've got high liquidity with that kind of asset class. You know, these kind of asset classes do not offer that. You've not got that centralized market. So that is a risk that investors must take into account, is that liquidity risk that you've got there. You've got the market risk, liquidity risk. Of course, you've got the asset risk as well. Very important to touch on. You are owning a tangible asset that's not in your possession. It's held in a government bonded warehouse in Mexico. All I would say to that is all of the casks that our investors own, they are insured fully for the market value of the cask at the time of any loss. So essentially, any loss or damage to their asset through no fault of their own, they are fully covered for that. But there is still the asset risk involved with the investment.
And are these insurance companies? Are these American insurance companies or are these Mexican insurance companies?
No, yes, we use Zurich.
All right. So, is there anything that we didn't cover that you would like to bring to the attention of investors? And then we'll get into how they can contact you if they want to learn more.
I would touch on exactly what our investment model is. We operate an invite only investment service at Gordon PwC. So this means that anybody who is referred to the business, be that through somebody that works in the company or be that from through an existing client of the business, they're able to take part in our investment pools. And to touch on the investment pools and how these work, so we will intermittently release a pool of casks. And to give you an example, so our last pool was in October, post prior to the UK budget that came out, and this pool was for 100 casks, and all of those casks were on a 3-year fixed term. So there's a minimum of 5 casks to enter that pool. And that meant that as a business, we had to find a maximum of 20 investors to enter that pool of casks on that 3-year term. So, yeah, that is the business model, the investment model that we operate, just so that investors do know that.
Okay. So why don't we, I want you to just what's the best way to contact you if any of our investors are interested in learning more about investing in tequila casks?
Absolutely. They're more than welcome to reach out to me directly, of course, on LinkedIn. I don't know if you can drop my profile in the link on this video. they're of course more than welcome to reach out to me directly. Otherwise, they can make an inquiry through the website. We've got a team of investment experts that'll pick up the inquiry and contact them, and they'll be able to answer any questions they've got, guide them through the process. So one of those two methods, they're more than welcome to reach out to me directly and I can chat with them. Otherwise, of course, through the website, general inquiry, one of our team will pick up on that inquiry.
Okay. And did you say the website name again?
It's gordonpwc.com.
Got it. Sam, thank you so much for coming on. I think this is definitely a fascinating asset class that's worthy of taking a look. So thanks again for coming in. Have a happy holidays and yeah, enjoy, brother. Take it
Thank
easy.
you so much.